Welcome to the September 18th, 2023 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group Wealth Management, and your financial weatherman with your weekly fast-paced tour of the global financial markets. The headline that you're going to see, well, you saw it this week and you'll see it for the next few weeks. It is the dreaded government shutdown. And by the way, it's happened before. So what does a government shutdown actually mean? Those of you who are good long-term subscribers to YouTube McGowan Group will recall the Treasury Secretary Janet Yellen yelling that the U.S. was going to default. And that headline in May caused even some market sell-offs. But it was a head fake. Why? I'm going to show you why, and we'll talk about what actually happens in a dreaded government shutdown. Right now, both sides are tossing mud at each other and calling each other names over who's going to be at fault for the dreaded government shutdown. All right, so this is the federal budget. This is $6.2 trillion in the 2023 federal budget. 1.4 trillion of it is borrowed money right here, the deficit, a 23% deficit. If we ran our household with a 23% deficit for very long, we know what would happen. That's an easy calculation. That's not going to work. Most of us have to live on less than we bring in, and then we build wealth. Here, on the spending side, okay, we have Medicare, Medicaid, Social Security and defense, and net interest on the U.S. Treasuries, which is rising because Federal Reserve raised rates. Well, there's two other categories. They're curious to me. One is called Other, $834 billion. Then there's Non-Defense Discretionary, $932 billion. That's $1.76 trillion in stuff that is actually not vital. So you don't have to default. As a matter of fact, if you stop spending those two categories, you have a surplus of about $200 billion. That's the government shutdown. They just shut down other and non-defense discretionary. That doesn't sound too hard at all. So when you see those dreaded headlines and all the infighting, don't let it sway you from owning great assets and a portfolio strategy with good cash flow. And by the way, if you go to networthradio.com, you can contact us there. The McGowan Group will set a time for your brainstorming session. We'll update your plan for 2024, 25, and 26. And I'm going to show you something important about 2026 when you're building a portfolio. Now, this is the Dow Jones Industrial Average 2-year. This right here is the October meltdown, right? There's going to be a huge recession. Dow hits 29,000. Now it's about 35,000 because the recession did not materialize. We told you that here too. That, here at YouTube we said, hey, we've got the real data. Currently, GDP is estimated at 4.9% positive growth above inflation. That's pretty strong. So Dow on its way looks like to something above 35,000 on that trend. Certainly there could be a systemic shock, so we need tactical safety in the portfolio too to control value at risk of loss. Who has done the best the last 3 years? I was curious. Took the S&P 500 companies and said, who performed the best, who performed the worst over a 3-year period, and it guides a strategy. You'll see a pattern here. Marathon Oil, 500%. Occidental, 500%. Targa Resources, Devon, Diamondback Energy, Marathon Petroleum, and Hess Corp. So 7 out of the top 10 were energy. Why? September of 2020, if you recall, we had had the shutdown, right? Oil went to a minus 40, and there was the premise that we were going to quickly move to net zero. That means zero emissions. And how do you get there? Well, you stop using oil and gas. Well, OPEC this week came out and said that is absolutely dangerous and you're going to destroy the world economies if that's what you intend to do in a mandate. Now, who's the worst performers? VF Corp, PayPal, Fidelity National, Match Group, Illumina, Warner Brothers, Paramount Global, Baxter, Market Taxes, and Stanley Black & Decker. That's all of them down half or more. This is West Texas Intermediate Crude. This chart goes back to 2021. So in this case, we see 130 a barrel at the invasion. We actually went through a time period during last year where oil was bouncing below 70 at times, and now it's 90. So that's the highest since November. That improves the cash flow of those companies. They're trading at 5 times cash flow. This is related to inflation. That increase in oil and gas prices contributed to a spike in inflation. We had been running at 2.5%, now 0.6%. That would annualize at about 7%. What's the best way to hedge inflation? Because it can damage portfolios and damage your buying power. Well, I believe that's energy infrastructure. Corporate earnings. These are overall corporate earnings for the S&P 500. This is the earnings recession of 2022. So an S&P unit, how much money do they make after tax? About $200, just below $200. What are the projections? Wow, this is huge, $275. That's a 37% 3-year increase forecast for earnings. The analysts tend to be a little too optimistic, and of course a systemic shock could disrupt that. But here, you have a very, very positive trend on earnings. That means dividend companies could do quite well over the next 3 years. I wanted to give you some good things and some bad things. This is ARC Innovation, Kathy Wood. The dollar, this looks pretty good if we go back to 2015, hit 158, now it's 43. That's quite a bit of value at risk of loss there. And the dollar-weighted return, everybody piled in right here in 2020 and 2021. And since then, the dollar-weighted return is actually a minus from inception. So that's the danger of too much technology, although it's great to have technology in the portfolio. This is Chevron. I was curious, what's the 30-year return? If I bought Chevron, I just reinvested the dividends. It's not a recommendation for your portfolio unless you get a written plan from McGowan Group Wealth Management, and we'll write down exactly what we're recommending and how much. But here, dividends reinvested for 30 years, it's a 10.8% average return. If you went and spent the dividends, you still made an average of about 7%. And you could see these huge drawdowns at the end of 2015. And that's the shutdown when oil prices went negative. Now it's about 4 to 5 times that. Well, what does that tell us? You know, these were good entry points. And it's always easier in hindsight, right? These are good entry points. So, another warning here, this was the electric school bus company. It was worth $7 billion right up here at $31 a share. It's a launch of an electric school bus company. It's going to be great. Now it's bankrupt. So $7 billion in capital wiped out. What are the characteristics of the companies? And we did an audio program. You can find it on Apple Podcasts, and you can go to networthradio.com. But my father came on with 60 years investment experience and did a segment on stupid things people do with their money. And one of them is buying companies that lose money or putting too much into a company that is losing money. Thank you for tuning in to McGowan Group YouTube. Be sure to subscribe, like us if you do like us, and be sure to set your time for your own brainstorming session by Zoom, or come down to the Crescent, meet the team that cares. We serve affluent families from the Crescent in Dallas. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions, that's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.